Electric vehicle stocks spring to mind quickly when investors are looking for the next big thing in the stock market. After all, investors are looking for long-term growth, and the electric vehicle market appears to meet this description. It's no secret that governments around the world are beginning to stress cleaner forms of energy. Even President Joe Biden believes that the auto industry's future will be electric. In today's video, we'll compare the two electric vehicle manufacturers, Tesla and Lucid, to find which can provide better returns. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free, liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Tesla is without a doubt a global leader in the space for electric vehicles and has generated outstanding profits for long-term investors. While Lucid Motors does not yet have revenue, the company does have the pre-revenue projections and plans to gain traction in a market that is rapidly expanding and attracting competitors. Despite the fact that many stocks in the electric vehicle business have cooled off in 2021, they remain a solid long-term investment due to the global move toward clean energy solutions and a fast-rising addressable market. In 2019, the global electric vehicles market was estimated at $162.34 billion, with an annual compounded growth rate of 22.6%. The market is anticipated to reach $802.81 billion by 2027. Such trends and returns cause investors to rack their brains as they hunt for the next booming stock. The recent downturn gives investors a chance to acquire strong growth equities at a reduced price. In view of these considerations, let's evaluate which corporation, Tesla or Lucid Group, currently have a better EV stock. Although Tesla is an established player and a market leader, Lucid has a dream to take off. Tesla history and projections. Despite the fact that the 2021 Lucid Air advantages from being the new kid on the block, including the opportunity to learn from the Model S's errors over the prior 8 years, Elon Musk remains the ultimate first mover. He's not just fast at troubleshooting, he's also a workaholic that pushes everything at a rapid pace. It's not about whether Tesla's competitors will catch up. Instead, it's about whether they can prevent further dropping behind. The historical reports from the last quarter show that Tesla is still on schedule to supply top-of-the-line goods. Tesla revealed its statistics for the second quarter in 2021 and sales of about $12 billion. Their adjusted earnings were $1.45 per share. Analysts watch stock expected sales of $11.21 billion and profit in the second quarter at 96 cents per share, which Tesla quite easily achieved and surpassed. In the second quarter, the EV powerhouse produced and supplied 200,000 vehicles and achieved operating margins of 11% during the period. Its GAAP net income for the first time exceeded the $1 billion mark, despite the challenges of the supply chain that affected car production. Tesla has announced that it wants to expand production capacity in the coming months so that it may achieve a 50% annual rise in vehicle deliveries in 2021. In comparison, Tesla delivered nearly 500,000 units in 2020 and already supplied 386,000 vehicles during the first 2 quarters of 2021. Tesla is sufficiently liquid to finance its product plan and growth capabilities. As a result, the company's operating margin will improve dramatically over time, and it will profit from economies of scale. In the last decade, Tesla's stock was on utter blast, and since August 2011 is back in astonishing 12,270%. This signifies that the stock trades at a spectacular valuation. With its $710 billion market value, Tesla has a sales price forward of 14.08 and price to earnings of 132.45, which is nothing anyone has seen so far, and shows the potential of the EV industry. Lucid Projections. It's not just the cars that cost a lot of money. The company itself costs a premium to purchase. Lucid Motors, with a market cap of $38.5 billion, went public through an SPAC merger with Churchill Capital Corp. In that transaction, Lucid Motors raised $4.4 billion to expand its production capacity. This means that Lucid is worth nearly 2/3 of Ford Motor Company's market cap, which in a regular year sells over 5 million vehicles. Lucid still has a lot to show. despite having some outstanding technologies and talented managers. Lucid, like Tesla, has a sizable following among young enthusiast investors, many of whom are drawn through internet channels. The company reports that it has over 11,000 bookings paid and that the firm is scheduled to supply this luxurious EV in the second part of 2020. On a single charge, the Lucid Air is expected to have a range of more than 500 miles. The 11,000 bookings for cars will assist the corporation to generate sales of roughly $1 billion. Lucid Motors' presently manufacturing capability is about 34,000 vehicles per year, with a goal of increasing this to 365,000 units in the next year. In comparison to the rival Tesla that secured approximately $226 million through its 2010 initial public offering, the acquisition puts Lucid in quite an attractive position. Unit quantities were predicted to expand quickly in February 2021. By 2030, the Air, the Gravity SUV, and other models will have produced 500,000 cars annually, up from 20,000 in 2022 and 2023. Lucid recently changed those calculations, but plans on an average yearly production volume rise of 88% between 2022 and 2026. The presentation of its investor on July 13, 2021, currently forecasts under 1,000 unit production in 2021, 20,000 in 2022, 49,000 in 2023, and 251,000 units in 2026, which would be very impressive for the company and will help them catch up the biggest rival in the EV industry. EBIT and revenue comparison. According to Lucid, revenue is expected to expand at a compounded annual growth rate of 198% from $97 million in 2021 to almost $23.8 billion in 2026. In an investor presentation, Lucid maintained its revenue prediction. When compared to Tesla's initial revenue of only $15 million, this is a significant difference. Tesla made $2.01 billion in profit after 5 years. Although promising, this figure falls short of Lucid's 5-year forecast. Of course, the electric vehicle market was not at its pinnacle at the time, but now that demand is much stronger, we can witness even more progress. Lucid's most recent prediction predicts a significant improvement in its EBIT outlook. According to the company, it now predicts a negative EBIT of $1.4 billion in 2021, which will improve to a positive EBIT of $592 million in 2024 and approximately $2.9 billion in 2026. While Tesla's first-year loss was just negative $71 million, it should be noted that sales were on the low end of the scale. For instance, if we look at loss in terms of percentages, the Tesla negative EBIT was 527% of its sales, whereas the Lucid projected negative EBIT is just 144% of its revenue, which is fairly excellent for a first-year startup. Lucid intends to create a positive EBIT 4 years after delivering its first automobile, whereas Tesla generated its first positive EBIT after 12 years in operation. Looking at the stock from this perspective, Lucid appears to be a candidate to walk away with the trophy. Lucid, on the other hand, will have to establish their worth when they deliver their first ever vehicle to a customer. The conclusion. Due to the low income and visibility of Lucid Motors, it's not possible to compare the valuations of Tesla and Lucid Motors side by side. Lucid Motors is a pre-revenue investment that carries a significant level of risk. However, we have seen that early Tesla investors have seen an exponential increase in their wealth, and it is possible that the same will be true for Lucid Motors stock as it was for Tesla stock. Should you purchase Lucid at this time? There are significant uncertainties. However, if CEO Peter Rawlinson is able to overcome the obstacles, the company's stock is a decent bargain. What are your thoughts? Can any other startup meaningfully replicate Tesla's success? And will the EV market grow quickly enough to support both incumbents and startups? Aaron certainly believes that Lucid will be the shining star of the EV sector, and Tesla should be afraid of them. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.